as you can see what happened right there. Let me just, so where's my marker? Right here. We formed these stops, we grabbed them, and then we started pushing through to the downside right here. As we pushed through to the downside, we formed these lows, we grabbed these lows, we did a reversal through to the upside right here, breaking this high, indicating, giving us a signal of reversal. We just grabbed the lows and we are reversing back up. However, then this reversal failed to the downside right here. As it failed to the downside, usually I always talk about this pattern when the market forms liquidity, grabs it, reverses, then reverses back again, which means the first reversal failed. I look at the next level of liquidity and try to target it. So right here, the market reversed, failed. Where's the next level of liquidity? We had bottoms right here, 1, 2. Where are their stop losses? Right here. So we could be targeting this low right there. And therefore this could be our next observation for EuroCAD right here. NZD CAD right here. 3 drives pattern, 1, 2, 3 into these bottoms right here, as you can see. And then it's starting to push through to the upside. As we started pushing through to the upside, we created these tops. We pushed into them, created tops right there, and then pushed through to the downside to take out these bottoms right here, as you can see. 1, 2, pushed into them, and then started pushing through to the upside. We also, as I said, we created tops right here. We also created tops right there in the beginning of that 3 drives right there. So this is the next observation for NZD CAD today. Let's see how that goes. Today is Wednesday, 27 March. I'm going to be highlighting my trading day. So before we start, I'm going to introduce my trades. We have this NZD CAD bullish setup and we have this EuroCAD bearish setup right here. Let me just do this a little bit better. Anyway, I'll fix the price action and the drawings later. Anyway, so NZD CAD right here, what's happening? As we can see, the markets, first of all, as we can see, I sent you my observation this morning, NZD CAD observation today. I believe that NZD CAD can have a bullish push at the moment through to the upside into these tops right there. So the way I'm going to deal with this observation right here that the market needs to push through to the upside is I just went to the lower time frames right here to the 30 minutes, and this is what I saw. I saw these bottoms right there, and I saw these tops right here. So at some point in the markets, there was liquidity on both sides of the charts. Now the market took the liquidity through to the upside right there, grabbed all of it, created tops. After grabbing these tops right here, we pushed into them and created tops right there, then pushed through to the downside. And here's the funny thing, that also regarding these bottoms right here, we created additional bottoms as we went into them. And therefore, I'm going to be really careful with how I approach this trade. It's very simple right here. We have liquidity grabs on both sides of the markets, and we have liquidity forming on both sides of the markets. So, is it a risky trade? Yes. How am I going to deal with it? Because it's a risky trade, I'm going to deal with it in the following manner. So, first of all, if I look at the price action right now, what the market has done is it has formed all these tops, pushed through to the upside, created tops right there, and the market is now retracing through to the downside. I expect the market to tap into this area right here and then push through to the upside at least into here. As you can see, this is also a liquidity grab. This is a volume area inside this liquidity grab right here. So therefore, when the market taps into this area and pushes up into here, I'm going to be taking partials at 1-to-1 risk to reward ratio. This way, if the market turns around and comes back because of this liquidity grab right here, I don't lose anything. It's a BE trade and therefore I'm risk-free on that trade. If the market doesn't do that and just continues going all the way up and grabs all the liquidity through to the upside, then 1-to-3 risk to reward ratio, done, get in, get out, that's it. And therefore, that's going to be how I deal with that trade. Now, EuroCAD. EuroCAD, we've had an observation that EuroCAD is going to be bearish for quite some time now. I believe that was on our first day right here. Where is it? EuroCAD, right there. as you can see, we've had that observation that the market is going to go down after that liquidity grab right here through to the upside. So liquidity was grabbed, boom, the market started pushing through to the downside, and we had that bearish momentum right here. We expected EuroCAD to push through to the downside and grab these bottoms. And therefore, because of this observation right here, what we can see is we can see that the market has pushed through to the upside, created all this liquidity to the downside. We just pushed down into them. As we pushed down, what did we do here? We created bottoms right there. So this liquidity grab actually created liquidity to the downside, and then we started pushing through to the upside slowly. On a zoomed in perspective right here, as you can see, the market created tops right there, pushed into them, created tops again, pushed into them, and maybe we can do it one more time. So that's why my entry is a little bit higher. So it's here. Let's say let's bring it a little bit lower. It's right here. The market then created tops right there, and I expect the market to push one more time into them, grab liquidity one more time, and then push through to the downside right here. The great thing about this position is that I can allow the market to push all the way down right here, take out all these lows, take out this low, take out this low, and as soon as we reach down, so there's almost no partial profits on that trade, because there's nothing that I am afraid of when it comes to that trade. Like, just grab the liquidity right here and then push down. On the 90 minutes, as you can see, let's look at that. The 90 minutes right here, what did we do? We just pushed up. This is our analysis in the beginning, is that the market formed these highs, pushed into them, grabbed, and then started pushing through to the downside. This is reversal failure right here. So we created bottoms, as you can see. Then we grabbed these bottoms. Then we gave a signal to reverse right here. Then we reversed to the downside again. So that reversal failed, and therefore we are targeting the next level of liquidity. Where is the next level of liquidity? It's right here, in my opinion. And therefore this is our target for now. Now, as soon as this, by the way, gets broken to the upside, the EuroCAD observation dies. We no longer look at EuroCAD the same way we're looking at it right now, because even the failed reversal just failed, and therefore we stop looking at that like this. So for now, this is going to be my position for EuroCAD, just to sell it down, targeting this area right here. And as you can see, we have a lot of room to run. All I'm doing is I'm taking just like almost half of it, trading it, getting out, and that's it for the day. So EuroCAD, NZD-CAD, NZD-CAD buys in that case, and EuroCAD sells. Let's see how that goes. I know that this is something that I'm going to talk about later. As you can see, on EuroCAD I am selling it, and therefore I am buying the Canadian dollar. On NZD-CAD, I am buying NZD-CAD, and therefore I am selling, technically, the Canadian dollar. So this is some sort of also a hedging mechanism when we have those sort of observations. But anyway, I will talk about it later. For now, those are my positions for the day. Let's see how they go. Quick look at the results and discuss a few things. So NZD-CAD right here made it up into our bearish zone right there, and then melted down. So partials plus SL. Then EuroCAD right here just melted through to the downside into our TP area, and even melted further than that. We'll discuss that later. That wasn't my only trade for EuroCAD. We've had trades later on. So EuroCAD done, as you can see right here, made it through into our area right there. And when it comes to EuroCAD as well, this is the second trade that we took on it, all the way down into there. However, this is not what I want to talk about. What I want to talk is about the difference between EuroCAD and NZD-CAD. So EuroCAD and NZD-CAD, they move the same. If one goes up, the second one goes up. If one goes down, the second one goes down. They are correlated, and they are both controlled by the Canadian dollar. So how did I deal with this in that scenario? So therefore, what I said is I allocated, and this is what I usually do, I categorize my trades or my setups into two categories. So two categories. The first category is my strong setup. The second category is my weak setup. So when it comes to my strong setup right there, as you can see, when I was trading EuroCAD, I said there's no partial profits for that trade, as there's nothing that I am afraid of when it comes to EuroCAD. And therefore my strong setup was EuroCAD, which means no partials and letting it run. In simpler terms, I am more aggressive on that stronger setup. Now the weaker setup, I go ahead and I say, you know what, NZD CAD looks weak, NZD CAD looks risky. So if it's a risky setup, what I'll do is I'll take partials at 1-to-1, for example, and then let the rest run. Okay? And therefore conservative, if I wanna describe it. So I'm aggressive on my strong setups, I am conservative on my weak setups. So as you see, when it comes to risk management, I don't have a one-size-fits-all type of risk management. I have multiple risk management strategies depending on the setup that I am seeing, which is how I personally trade. So if the setup is strong enough and I trust it enough and I am confident about it enough, I'll let it run. If the setup is a weak setup, I'll go ahead, I'll partial at 1-to-1, for example, to protect my capital, and then I'll let the rest run, which is a conservative risk management strategy. So basically, I have two risk management strategies. The first one is an aggressive risk management strategy, and the second one is a conservative one. And if I'm trading two setups today, for example, two pairs today, I'll apply the aggressive risk management strategy on the strong setup and the conservative risk management strategy on the weak setup, and this gets me the most profits, because as you realize right here, as you can realize as we look at the Discord again, you'll see that NZD CAD was the weak setup, the one that I allocated partials for, and I turned out to be right. Because I took partials right here, that setup turned from a minus 0.5% to a 0% setup. Of course, you can then remove the spreads, the commissions of that setup. This is what I lost when it comes to NZD CAD, and therefore that protected my minus 0.5% loss. And on the other hand, because I had a strong setup right here and I allocated the aggressive risk management strategy to it, I ended up benefiting from a full 1-to-3 risk to reward ratio, which is 1.5% for that trade. And this is how I apply my risk management strategies. And guys, this will be the end of that video. Now feel free, if you'd like some more, to subscribe, notifications on, all the YouTuber stuff, and I'll see you guys in the next video.